Okay, so now we're going to look at the cash flow statement, one of our 3 financial reports. So it's all in the name with the cash flow statement. We're only concerned with the movement of cash. This may be a cash inflow or a cash outflow. A cash inflow is any and all money coming into the business, any receipts. So we'll be looking at our cash receipts journal here. Cash outflows are any money leaving the business. So that's our cash payments journal. So the way this report looks is that we break it down into operating, investing, and financing activities. Operating are our day-to-day. So all of the normal transactions that a business will have in its day-to-day. So breaking down further into inflows and outflows. Inflows would be things like cash sales. Now only cash sales here, because a credit sale doesn't have a movement of cash. It does become a cash inflow as a receipt from debtors. So when the debtors actually pay us our money, that's a cash inflow. Outflows would be things such as wages or rent. Any kind of money that the business has paid in their day-to-day activities. So you have to make sure the business has paid it. So if it's an accrued expense that's been incurred but not paid, it doesn't go in the cash flow statement because there's no movement of cash. If it's a prepaid expense, the whole amount goes in there that has been paid. Even though it hasn't been expensed, it's a whole amount that's been paid. So only cash items. Discount expense or discount revenue needs to be taken away from the debtors or the creditors because that is not a movement of cash. It changes the amount that we receive from the debtor or have to pay the creditor. Investing activities are all about non-current assets. All about purchasing non-current assets or selling non-current assets. The inflows will be when we sell a non-current asset and we get money for it. So if we have an old delivery van that doesn't work for us anymore and we sell it for $1,000, that $1,000 will be an inflow. An outflow will be the purchase of a non-current asset. So if you buy a new van to replace that for $20,000, there'll be an outflow of $20,000. Financing activities is all about loans and capital. So inflows will be the very first time that the business takes out a loan. So that takes out a loan for $20,000. That will be an inflow because the business will get that $20,000. The second outflow will be a capital contribution when the owner gives money to the business. Outflows will be loan repayments, but only the principal component. When you repay a loan, you pay back the principal and interest. The interest will be up here in operating expenses. So you need to remember to separate the loan repayment into its interest component that will go in operating and the principal, which will be a financing outflow. The final financing outflow is drawings, when the owner is taking money out of the business. So once we've made sure we've entered all this, so this will typically come from our cash payments and cash receipts journal, we end up with totals here. So our total net cash flow from operations, from investing, and from financing. The business needs to be making more in form of inflow in operating activities than the outflows, because that's its core activities. That from operating needs to be able to finance operating and financing activities. So when a number is in brackets, that means it's negative. That means what we call it a deficit. So we have to add these 3 totals up or take them away if any are negative. That then gives us this number down here, which is our net increase or decrease in cash position. So over the reporting period, have we had more inflows or more outflows? Bank balance at start is how much cash we had in the bank to begin with. Bank balance at the end is what happens when we apply this deficit or surplus, the net increase or decrease in cash position, to the bank at start. So we can use this to check against the bank statement to make sure we're on track. So finally, only cash items, inflows and outflows. We're only concerned with cash.